Sandeep, to you first. If you really had to chalk out the landscape that we're currently in when it comes to infrastructure, both in terms of the order book pipeline as well as funding, what would you say the scenario is looking like?
Morning, Aisha. Morning to all the viewers as well. I think being an election year, we were all expecting that the first half of the current financial year was expected, essentially to have a very robust kind of an order book position. And that pipeline, I think, has been created. It's just that the markets have actually been, a bit disappointed with the kind of results which have showed up, with some of these listed companies in the infrastructure and road space. And I think the overhang of what has happened with Island FS has also been playing out with a lot of these infrastructure stocks. Unfortunately, Island FS is more of a localized issue, but it is playing out on a lot of these companies which are in the EPC space as well. If you talk about financing, I think that's the area of major concern. Financing today, starting with the fact that the banks are really floundering on, or most of these banks are basically trying to manage their own issues around NPA. 11 of these banks, till just before the budget were under PCA, and 3 of them are just out of it, which leaves us with very limited kind of an appetite coming in for financing for these infrastructure projects from the rest of the banks. NBFCs have been hit. So while there was a ray of hope around NBFCs and the private banks to come to rescue to fund some of these infrastructure projects, even that story has actually been pretty subdued over the last 3 to 4 months. And that is actually the bigger concern which I have. While there is very limited appetite to refinance some of these operational projects, but the biggest concern is in terms of taking the risk around the greenfield projects. So while the government has done its best in terms of tweaking their model, iterating it, changing it from the BOT to the EPC and HAM, but unfortunately, even for a moderated risk model like HAM, there is very limited appetite for the banks to fund it.
All right, let's also bring on board then Rohan Suryavanshi, Director Strategy and Planning at Dilip Buildcon, who joins into the discussion. Hi there, good morning, Rohan. Now, what's your assessment? Because growth in the construction sector has been strong in the third quarter, the second highest incidentally since 2012. What are you making of this trend, and do you believe that it will continue?
Hi, Aisha. First of all, thank you for having me on your show. So you're right, the growth has been pretty robust in this quarter. And I personally expect this growth to be there for at least, coming couple of years. And my reason for that is very simple. If you look at the order book situation of all construction companies, they're staring at right now at least a 3-year forward-looking order book. So that gives us great visibility till, almost, the half of, FY22, I would say. So I don't foresee that there should be any problem. And, what's more important is most of these orders have been won at decent margins. The competition was pretty much under control, when the bidding was happening. Just because, the sheer bulk of orders that happened in the last 2 years, all companies have been inundated with work. So I think the growth should be pretty decent. On top of that, might I also add, Government of India specifically, if I talk about, has already floated about 1,20,000 crores of orders in the market. This is specifically the road sector. Now, what that means is that these orders can only be floated when majority of the land acquisition has already happened. So the government has already paid the farmers or whoever the landowners in that situation. And even if before elections these orders don't materialize, if bulk of them don't materialize, after elections, whatever government comes to power, these orders will still come out. Surely because already half the money has already been spent in these orders. So these are very real orders. These are orders where majority of land acquisition happens. Now, secondly, after this, there is another round of orders where the government is in the process of acquiring land, which haven't come out to bid, and those order pipeline is also coming up. So we can see that not just the current order book with players, but also the orders that have been floated by the government provides us a fantastic visibility till 2022. And that's why I am optimistic about the growth, even for the next, I guess, 8 quarters, guys.
Right. Sandeep, do you think that, strengthening of FY19 execution, which has happened so far, will only increase in FY20 and how is it that balance sheet of companies are placed? Do you think they can support this kind of growth in FY20?
Well, Aisha, if you see the things which, the top 10 or top 15 companies in the infra space, essentially talking of the road sector, could do, have actually done their best. If you look at their balance sheets over the last 3 years or so, I think their debt equity ratio has been gradually reducing, which, puts them in a very comfortable kind of a position. If you look at their order book position, which I think Rohan just mentioned, they are, I guess, on an all-time high. The other aspect, of course, is the margins at which, these orders are going to be executed and the pace at which these orders are going to be executed. Given that the competition actually has been coming down over a period of time, and this is the pattern that we are observing over the last, 2 years or so, it gives, much more visibility in terms of a robust margin at which some of these, major players would be able to execute orders. Having said that, I think they would still be dependent on the non-fund based limits as far as the EPC contract goes, and that is a major problem today in terms of financing from the banks. And as far as projects on the HAM, the hybrid annuity model, which has been a very progressive looking model, it has still undergone a huge degree of, it has come from it has actually got a huge degree of resistance from the banks in terms of funding it, because there is still an element of greenfield risk which still lies in, these HAM projects. So, my answer basically is that whatever has been, whatever they could have put in control, that has been put in place, but there is still a large part of dependence on the banking system to come to rescue to fund these projects.
Now, Rohan, so far the kind of order inflows have been driven by the central government or come from the central government. Do you think that the orders from the private players and the state government have the potential of now picking up? Or are you seeing them being picked up?
Central government has been robust in, in giving out orders across sectors. I think even state governments, have been doing their part, and they've given out a huge, they've also been, pretty, they've partnered. I mean, they've been equal in terms of the central government also. Like if I look at Maharashtra, Maharashtra government is building expressways. The Samriddhi corridor is one example. If I look at state of UP, there's lots happening there. If I think about Andhra or Telangana, a lot of infrastructure projects happening there as well. So I think across state governments are also doing their part. So I don't know how much more can they do given their own balance sheets and their own financial issues, but I think they've also been fairly robust. Now, private sector investment for sure, I think, has been a little tepid, and part of it has been obviously, the overhang from the last cycle that, a lot of developers who had gotten into, the sector have not had a good experience. And then, the overall, like we mentioned, the banking system has right now not been very supportive. So even for a new guy to come into the sector or act as a developer, it won't be supported by the bank. So I don't think the banking system will work. The private sector will do that much as we could have expected in the last cycle. But I think, to be fair, the central government and the state governments have been giving out enough orders for us to not feel that the private sector is not really kicked off.
But Rohan, looking out, you think financial closure of various large projects, has that been an issue? I know you touched upon it just now, but do you think that's one of the key triggers to look out for in the infra space going forward as well, given how tight a liquidity crunch we're facing in right now?
The financing of the projects? Sorry?
Yes, that's right.
So I have a slightly different view. If you look at all the large listed players who account for majority of the business, all of us have gotten financial closure for all of our projects, and if not, we're in the final stages of getting financial closure for all of it. Even some of the smaller ones who don't, who had limited appetite, they have been ultimately being successful in getting the financial closure done for their project. Now, this has been tough just because, the banks were under stress and there wasn't enough capital to go around. So while this was a much larger concern earlier in this financial year that, all these projects will not get financial closure, if I look at the current data, I think most of them are in good shape. while there are still cases where it's not there, but that's a very small amount of time. But yes, getting non-fund-based limits have been tough, as was rightly pointed out. In terms of the overall working capital, and banks have been getting new working capital, all those things have been tough. But I think it's more of a temporary situation because the government is also looking at it very seriously. And over the next, I think, couple of years, we should see some easing happening in the overall financing situation as well.
Right, so on that positive and optimistic note, we'll wrap up that discussion. Many thanks for joining in, Sandeep as well as Rohan, and giving us an insight as to what